Finally, the hefty 50% tariff on Indian merchandise by the US has kicked in from August 27, 2025. But question is, how India is prepared to cope with the hit. Presently, the value of Indian export to the US is around $87, which consists textiles, leather products, gems and jewelry, carpets, pharma products and electronics items. The pharma products and electronics items are exempted from reciprocal and additional tariffs, but other labor-intensive sectors producing textiles, leather items and gems and jewelry are facing severe hit, apprehending to cause significant job losses. Since some of these sectors are extensive export-oriented, out of which a major portion go to the US. However, the impact shall not be so severe as was expected from the US think tank. India has a massive domestic market and the economy is not export-centric. This is why Indian economy is mostly resilient to the external pressure. Despite the tariff threat from the US, India's global sovereign rating from the S&P has been upgraded. Export predict a robust GDP growth during FY 2025-26. The reason is Modi government masterstroke to bring massive reform in GST rate structure. Such reform shall pour more purchasing power for domestic consumption. It shall also prompt the RBI to undertake rate cut, enabling more liquidity in the economy. That shall, in turn, accelerate easy lending and spur an investment in job creation. The reciprocal and additional tariffs has only impact to Indian export to the US shall be around a value of around $45 billion that will very soon be offset by increasing domestic consumption. Furthermore, the festive season in India has started, which work as a protective shield for Indian market by creating heightened demand for consumer items. But think for a while, if India had agreed to terms of the US to stop purchasing oil from Russia at discounted price, what would have happened? A steep price rise in petroleum fuels might have crippled the market. Inflation might have spared. All the gain from the reform in GST structure would have been wiped off. This is why the trade deal with the US cannot be struck as long as US does not drop its evil terms to spoil Indian economy.